What's up, crypto fam? It's DeFi Crypto Talk here, and we need to have a serious conversation about Kaspa. Right now, Kas is trading at just 0.06, and while most people see this as a bearish signal, the on-chain data is telling a completely different story. Large wallet addresses, what we call whales, have been aggressively accumulating at these levels, and the smart money is positioning for something big. The question is, are they seeing something the rest of the market is missing? In the next 10 minutes, I'm going to break down exactly what's happening with Kaspa at 0.06, why this price level could be a generational buying opportunity, and what the data is actually telling us about where Kas is headed next. This could be one of the most important Kaspa videos you watch this year. Let's dive in. Alright, let's start with the reality check. As of today, October 13, 2025, Kaspa is trading at approximately $0.06. And yes, I know what you're thinking. That's down significantly from the highs we saw earlier this year. Over the last 24 hours, we've seen some volatility. And if we zoom out to the 7-day and 30-day charts, KAS has been in a downtrend along with most of the altcoin market. But here's the thing. Price action alone doesn't tell the full story. At 0.06, Kaspa's market cap sits at approximately $1.4 billion, still maintaining its position as a top 50 cryptocurrency. Daily trading volume is ranging between $30–50 million, which shows there's still significant liquidity and active trading happening. Now let's put this in perspective. Kaspa isn't alone in this correction. If we look at other Layer 1 blockchains, many have pulled back 40–60% from their recent highs. This is a market-wide altcoin correction, not a Kaspa-specific problem. But here's what's fascinating. If we look at Kaspa's historical price action, every major accumulation phase has happened during these exact types of corrections. The last time Kas was at these relative levels compared to its moving averages, it rallied over 300% in the following months. What really caught my attention is the volume profile. Despite the price decline, we're seeing consistent buying volume. Selling pressure is decreasing, but buy orders keep coming in. This is textbook accumulation behavior. So while the price says one thing, the volume and market structure are telling us something completely different. Someone is buying at and sure they're buying a lot. We have price weakness, but strong participation and liquidity still present. Context matters. Broad market risk-off can mask accumulation signals. Kaspa's signal stands out when you look under the hood. This is where things get absolutely fascinating, and this is the data that separates smart money from retail panic sellers. Let's look at what's actually happening on-chain. According to the latest data, the number of Kaspa wallet addresses holding more than 1 million KAS has increased by over 15% in the past 30 days. Think about that. While the price is dropping, the number of large holders is increasing. These aren't small retail investors buying $100 worth of KAS. These are wallets accumulating millions of dollars worth of Kaspa at 0.06. That's serious conviction. Even more telling, exchange outflows have been consistently higher than inflows for the past several weeks. In fact, over 50 million KAS has left exchanges in the last 14 days alone. What does this mean? It means people are moving their KAS off exchanges and into cold storage. When investors move crypto off exchanges during a price decline, that's one of the strongest bullish signals you can get. They're not planning to sell, they're planning to hold through whatever comes next. In just the past 7 days, we've tracked multiple transactions over $50,000 worth of KAS. One wallet alone accumulated over 5 million KAS tokens at these levels. That's over $300,000 being deployed into Kaspa while everyone else is panicking. Smart money steps in when fear is high. And the footprints are right there on-chain. The number of active addresses on the Kaspa network has remained remarkably stable despite the price action. We're seeing 40,000, 50,000 active addresses daily, which is actually up from earlier this year. More active addresses means more real usage and more network effect. Daily transactions on the Kaspa network are averaging over 200,000 per day. This isn't just speculation. people are actually using the network for real transactions even at these prices. Now, let me show you something critical. This is what the on-chain data looked like right before Kaspa's rally from 0.03 to 0.18 earlier this year. Notice the pattern? Decreasing exchange balances, increasing whale wallets, stable, active addresses, despite price decline.